Andrew Holland is now joining us. He's Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, good to have you with us here. Thanks very much. You know, I think from the last time that we spoke, you got that one day, which is last Tuesday, where we saw a bit of a shakeout overall in the broader markets, mid and small caps, etc. And then, right back, markets moved on, especially that part. What's your sense, Andrew? For some time now, oil prices have been a little uncomfortably high. US yields have been high, but things are looking pretty all right. Otherwise, your sense near term?
Right. I mean, there's a lot of things which should concern us, including bond yields, oil prices, stagflation in Europe, China. But as you say, it's not impacting our markets at the moment, and that's because I think it's still a bit. The data out there is still very messy globally. So you go from 1 week of thinking that there's a more Goldilocks soft landing to the Fed might have to kind of increase rates one more time this year. So that's kind of lending itself to kind of markets going really nowhere. Over that period, in terms of you're not seeing any big falls because of these headwinds or potential headwinds globally. So our markets has continued to enjoy the momentum because obviously the feeling is just reading a report from CLSA about Jeffries from the Hong Kong investor conference saying that everyone loves India. No one likes China, so that kind of flavour continues globally towards India, which is good news. And I think that positivity is kind of reflected in our markets. I'm not sure what happened last week in terms of the small and mid caps in terms of that fall. Perhaps it's just taking it from that wholly overbought zone to a more kind of just under that. So I think our markets will probably head higher. We'll probably go into overbought zone and then correct mildly from there in the short term, unless any of these global headwinds really start to play out, Prashant. And obviously that timing is difficult to catch at this present moment.
What are the red flags for this market now, according to you, Andrew? I mean, do you think crude as a headwind is something that could derail the market? The upcoming election is something the street is watching out for very closely. There is this looming fear that there is perhaps not just a global recession coming, but a correction coming in our own markets as well. But nothing is played out just yet. Do you think that's an irrational fear?
No, I don't think it is. I think, if I think about, the possibilities of what could happen in the US in terms of the commercial real estate, in terms of, any stimulus that the Chinese government does, which is a lot larger, than the markets expected, would obviously push up commodity prices, including metals, a lot more, which is not great for India. If China does nothing, the yuan will continue to depreciate, which puts, emerging market currencies, including ours, under pressure. Again, bad for inflation. There's no monsoons. The monsoons are poor. El Nino is still being talked about. So, if you throw all that into your thinking, then markets should be for a correction. But when momentum's strong, you keep with it. For the time being, there's nothing wrong with India. I think I'm very constructive on India going forward, but the global factors are messy, and that's what concerns me more.
Hi, Andrew. Good morning, Andrew. What are you making of the kind of move that we're seeing in some of these PSU banking index? Even today the markets are under pressure, but the PSU banks, they believe there's more to go. Are you looking at that space, or will you stick to the large private sector banks?
Yeah, I mean, I think we've always had this view that, when the banking sector has a run, then the PSU banks will surely follow. But it's a sector or subsector, which we've always said, for many years, that it's an area we'd like to rent and not own, on a long-term basis. So, when you have these kind of runs in the banking sector, then PSU banks would be a good trading side of making money, but not for a long term, not on a long term view.
Okay, not a long-term view. So you're saying that these are trends that one can perhaps latch onto for the near term, near to medium term. But PSU banks as a category has not given you returns. But don't you think that narrative is changing now, Andrew? Because if you see it not just with PSU banks, but say something like a defense space, the capital goods space, for example, right? I mean, BHL is starting to perform after 5 years of a lull. Don't you see some of these laggards now enter into some sort of an upcycle, structural upcycle?
So I think the defence sector is slightly different, but I'll come back to the other points as well. It's slightly different in that, this is a global trend. We'll see more and more countries, including India, spend more in defence. So that's great for the defence stocks. Unfortunately, it's always lumpy. You never know the timing of these contracts. And that's what will drive the share prices continuously higher. Not the execution, maybe, but certainly the order inflows. In regards of some of the other companies you mentioned, the fact is that they were laggard for a reason. Yes, it's okay, they can catch up. But, you got to question why were they a laggard before? And the laggard reason was because their execution was poor. But if you go through the last cycle of the Capex cycle, that 2004 to 2009, most of the companies' share prices did well because of order inflows rather than the execution that they did over that time. So if you think there's more inflows for these companies, great, you'll make some money short term. But I think long term, you'd always have to keep a wary eye on how they execute.
Okay, how you execute. Andrew, anything else? Any other idiosyncratic single stock kind of opportunities that you see for owning, renting, anything?
Continue to like the kind of beverage theme, non-alcoholic and alcoholic as a premiumization continues to work through. Like the electronic manufacturing sector, both for domestic and global exports going forward. But I think if I was to look at one area which is probably more short term would be the impact of a higher oil price, which the narrative out there, Prashant, you've seen it. It's for $100 oil price in the very near future, and I think someone from I think Saudis are talking about it maybe today or tomorrow. If that was to be the case, that would have a negative impact for a lot of companies in India. So that would be the theme. And obviously, you can think about FMCG, you can think about paints, you can think about these types of companies which would have their input costs starting to increase quite quickly, of which maybe this time they won't be able to pass on.
Andrew, how have you changed your positioning, your long-short positioning, say in the last couple of months? Because momentum has been strong, but as you have highlighted, there are some red flags that are emerging on crude, the dollar index. The global markets, as you said, global economy on the whole is a little bit messy. So how have you changed your long-short positioning?
So it's really been obviously a little bit more dynamic than usual, but we kept more on the long side because the momentum is there. And again, Nigel, it's difficult to work out when the change or when some of these factors will play into the markets and bring them down. So we think it's going to be probably sooner rather than later because we're getting to overbought zone in the nifty. So something will happen out there which corrects us mildly, and hopefully it's not too serious in terms of the global factors.
Okay, all right. Andrew, thanks so much for stopping by, giving us your view on the markets as well as on individual sectors. Wishing you a good day ahead.